Hello there. So today I'm going to be talking about this liquidity concept, which is the very important concept in my trading strategy. So basically, what liquidity is? Liquidity, to simply put, is just the money in the market or a stop order in the market, basically, where all these traders, hedge fund, and money managers they put their stop losses in order to protect their position. So it's basically it supplies fuel to the market. As you can see, I have like few depiction here. So basically, liquidity is present everywhere in the market, right? If you see there's a trending market, it is creating higher low, higher low. So it is generating liquidity to the downside, and at the same time, it is taking liquidity at the swing high. So there was like liquidity present at one time. So when the market was right here, market was aiming for the stop orders that have been sitting right here to be taken. So what market did, it impulsively moved to the upside, taking all these stop losses and putting all those uh, seller who were shorting the market, so they were out of the game. Did the same thing again, market retraced, protecting this low, but at the same time breaking this swing high, also taking liquidity, also taking like stop orders. Conversely, in a downtrend market, basically it is making lower high, lower low, doing what? Impulsively moving to the downside, taking these stop losses here. The people who bought here, they put their stop losses here, hoping the market would go to the moon. But in fact, what market did, it turned around and took their stop losses. So kick them out of the market. Same thing happened here as well. Market moved, people started, buying here, hoping that it's going to go to the upside. But in fact, market was had its own mind, basically moved to the downside, taking the stop losses here. So you can see there's a trend line in liquidity as well. So people are trading trend line, and they're putting their stop losses here. So what market can do, basically, at some point, market can turn around and basically it can go from here to the upside, taking all these stop losses here and turn the market to the upside. So market does it all the time, basically, right? So the goal of the market is to be efficient, to keep the ebb and flow of the orders, and that's why it's seeking all the liquidity, and those stop losses are here. You can see there's a equal high. People are trading double top, double bottom. They're putting their stop loss here. So what market do? Market create like a equal top and showing that it is basically going to the downside, but in fact it is basically generating liquidity and eventually taking the stop losses of these the buyers sellers who basically shorted the market here, taking their stop losses here. Same thing, as you can see, uh, people are trading double bottom, so taking trades here, putting their stop losses there, so market can turn around from here and take their stop losses here and put them out of the market. So these are the points that you can remember. They're like a trend line. Liquidity is also, basically, is very important thing when you're looking for liquidity. There's equal high, equal lows as well. Swing high, swing lows, which are these daily high and daily lows. So let me show you the example here on the chart, so that way you would have a clear idea what I'm talking about. As you can see, this is the current market right now. So right now, the market is moving to the upside, right? Taking these stop losses here, breaking the structure, we're creating higher lows, also taking these stop losses here, and eventually this swing low, swing high has been taken. There were like some stop losses sitting here, so it grabbed the liquidity and turned the market around. Now you can see I drew like a trend line here just to for my understanding, just to make sure that I know where the liquidity is. So this is the liquidity right here. Market generated liquidity, and finally, what market did, basically, is in the process of breaking this swing low and taking these stop losses here. People or the trader who bought here, they have their stop losses right here, and market eventually did not break up, but it broke down. taking the stop losses here. You can see here also, you can see this is equal lows here. So market went up, people started trading in this one right here, where I put the dollar sign, equal lows. This low, then it created another low. So equal lows, or double bottom, if you want to call it. It went up impulsively, people thinking that it's gonna be moving to the moon, but in fact what market did, turned around, took them out of the position. Similarly here, traders were like buying at the dip trend line. Basically what happened, market basically turned around and took all these stop losses right here. Here it created equal lows here, this low and this low. What market did, basically took them out of the position. Here also, relatively equal high. Basically people started shorting the market. They shorted again, and what market did, it showed that it was going down, but in fact it moved to the other side and taking the stop losses there. So this is how the market moves. Actually, you'll find liquidity everywhere, and liquidity is the one that drives the market. All right, so hopefully this was insightful. Please make sure that you're marking your chart and you're marking your trend line, your swing highs, swing lows, like exactly what I did right here. So that way you would know where the stop losses are, and we are basically targeting those stop losses based on this structure and order block and fair value gap. Okay, thank you so very much. Have a wonderful day. Bye bye.